Welcome back. Well, as promised, let's get straight to the management of PFC. Remember, the stock has been a big outperformer in the last 15 months or so. To understand what's going on at the company, we have Parminder Chopra, the CMD and Director of Finance of PFC, who joins us on the show. Good morning, Ms. Chopra, and thanks so much for joining in. Well, give us a few basic details, ma'am. For AUM growth for the current fiscal, what do you end up with? And for the next fiscal, how is it shaping up? And if you could also throw some color on how much your par and your non-par mix is likely to move in the time to come.
Yeah, good morning. On the growth front, I would like to say that we have been maintaining that we are going to have a sustainable growth levels from 10 to 15% this financial year, as well as going forward for the next financial year also. On the disbursement front, I would like to share that this year on 9 months to 9 months basis, we have already grown more than around 70%. But the speciality or the pattern for the disbursement for the current year has been that it is being even out throughout the financial year, and consistently we have been performing in all the 3 quarters on the growth front. So last year, the pattern was 55% has been done in the first 9 months, whereas 45% was done in the last quarter. So this year also we are expecting that we will be growing in the range of somewhere between 12-13% to 15% on the incremental base.
All right, Ms. Chopra, just a couple of points here. You're guiding for 10 to 15% growth. That's quite a wide range. Will it be closer to around 15% or will it be closer to around 10%? If you could just narrow down on that range. And also, if you could tell us about this mix, this par and non-par, because you're looking at non-par, the par sector has a lot of tailwinds and you have good competency out there. But in the non-par, it'll be interesting to see how you cope up. Give us your comment on that.
See, what we are expecting somewhere 12-13% to 15% for the current financial year and going forward also. So you can very well say it will be somewhere, it's a very narrow range, what I believe. On the mix between the par and non-par, we have been allowed, even though we have been allowed for the infra space funding since October 2022, and we have sanctioned number of projects. But since infra projects generally take time to convert it into the disbursement. So we are expecting that next year, whatever sanctions we have done on the infra space, be it the metro, be it airports, we have funded refineries, we have sanctioned ports and other infra also. So we are expecting that all these are going to materialize in the next financial year. But we are going slow and consistent in the funding of the infra sector, because you know that there is a gap of on overall basis 30% of the disbursements.
Okay, so just to clarify, earlier you had guided for a 15% AUM growth in your conference call, but now you're saying that it could be 13 to 15%. So you've lowered it a tad bit, right? Is that fair? Is that fair to assume?
You can, I think that it is going to remain in that range only. We may touch 15%, but.
Okay, just trying to understand how. But the reason I'm asking you is because, there is some segments which are seeing very slow growth, right? Whether it's generation, transmission, the distribution business growth has been quite slow. Are you facing any pain over there?
I don't think that there is any slow pace of capex in either generation or transmission. And on the distribution front, you know that 2 of the government schemes are running. One is the LPS, under which we are funding LPS and RBPF. And the other one is the RDSS scheme, on which, even though there has not been any disbursements during the current financial year on the counterpart funding which is being provided by the nodal agencies, we are expecting that next year it is going to be there, and it is going to pick up the pace, because lot of process about the sanction, award of contracts, etc. has now been completed. So next year we are going to see the work on the ground, and accordingly the disbursement on the distribution schemes is going to happen.
All right. Ms. Chopra, hi, good morning. Prashant here. I just want to press on the infra point. Actually, the bigger story really, which many investors talk about, is that who's funding infra in the country now, large infra projects? If you look at it, most private banks are out of it. Everybody wants to do retail. I mean, at least that's what's happened over the last 10 years or so, right? So actually large infra funders are, I mean, you guys are there, and maybe, on the PSU banks are there, right? So it's kind of diminished. And infra capex is now picking up, unlike the last 10 years. So, you did briefly mention on infra, there is a big gap between, you said, sanctions and disbursements. So, could you just explain that?
See, like I can give you an example that when we sanction the project, the contracts are yet to be awarded, and in times certain approvals are yet to be obtained from the relevant authorities. So these are put as either pre-commitment condition or pre-disbursement conditions. And these, once the complied, only then the actual disbursement starts. Based on that, whatever advances are required to be given to the contractor, and the work at the ground level is started. So conceiving an infra project and actually disbursements taking off generally takes, as per our experience, between 1.5 to 2 years minimum. So that is the time lag is always happening. So that is what we were referring to.
That you're going slow, and that's a great thing in that space. The demand is there, but you're being prudent in that sense. Could you just talk to us about the cost of money for you, cost of capital? What is it in the fourth quarter? What's your expectation, and what's the what margins should we expect, net interest margins for FY25 as you see it now?
On the cost front, yes, everybody knows that the costs are, interest rates are on a higher. Last time also, if you see, we have said that it is expected by the market that higher for the longer. So we are, this is what is we are experiencing. So this quarter, if I say, our cost of borrowing has been around 7.25 to 35. So there we are on the cost front, but we actually pass on at these costs in our lending interest rates also. And this is how you may have seen that there has been a 10 bips increase in our yields also. So as per our earlier guidance, we are expecting that our spreads and margins are going to be in the range of 2.5 for the spreads and around 3 to 3.5 for the margins.
Okay, all right. Ms. Chopra, final question before we let you go. Could you let us know the status of the stage 3 assets, and when do you see meaningful resolution?
See, stage 3 assets, you know that we have reduced drastically the stage 3 asset if I talk about 4 years back. So now our stage 3 assets is around 3.5%, and net stage 3 asset is less than 1%. We are at 0.9%. And I think this is one of the healthiest NPAs, net NPA levels in the industry. Going forward also, we are expecting in the Q3, we have resolved one of our asset that was the dance energy. It was PFC's exposure was around 400 crores, and we have recovered around restructured with a sustainable debt of around 85%. This quarter also, we are expecting 2 more assets to be resolved. One is the Lanco Amarkantak, and the other one is the Shiga Energy, where we are expecting good recovery to happen.
All right. Okay. All the best. The stock has given great returns to shareholders. In the last 12 months, the stock is up about 260%. So congratulations on that, and all the best with the business as well going forward. That's Power Finance Corporation.
Yeah. So now in terms of the stock returns, we run the show inside out. And in December 2022, give and take everything, there was no buzz about the company at all. And it's online if you want to check it out. We had covered the stock, explained it at around 135 odd, and we had said that there's an alternate way to play the power sector. And we had put out valuations out there. It was trading at rock bottom valuations from there. And from there, it's done quite well because we covered it at around 130, 140 rupees. And the stock ran up quite a bit from there.
Oh, absolutely. And the management sounding very confident as well.